Let me ask you something. If home prices were really going to come down, wouldn't we be seeing it clearly by now? Everybody, Bob Sokoler, owner of the Sokoler team at simpler.realestate, formerly Remax Properties East. We've had higher mortgage rates for quite a while. Inventory has improved in certain parts of the country, including a little bit here in Louisville and southern Indiana, and buyers aren't bidding aggressively the way they at least were 2 or 3 years ago. So it makes sense that a lot of people are thinking, okay, this has to be the year prices finally fall, right? Right? Maybe not. Once you step back from the noise and focus on the numbers, the situation is not as simple as it feels. Yes, the market has shifted. Yes, things have cooled from the frenzy we experienced a number of years ago. But cooling off and coming down are two very different things. So today, let's look at what the numbers are actually saying and what that means for you if you're buying or selling in 2026. All right, so no drama or fear-based predictions, just data and perspective. So let's start with number one, what the national data shows. We start with what the data is actually telling us. The Federal Housing Finance Agency, or the FHFA, releases a quarterly house price index that tracks home values across the country. It's the most recent report, quarter one, 2026. Prices are still up compared to the same time last year. Now, the growth rate is much slower than what we saw during the pandemic surge, but it's still positive. That matters because when people talk about a housing correction or crash, what they're usually imagining is broad national price declines across the board. Now, that's simply not what the data is showing. Let's look at Zillow. Zillow Home Value Index also shows that U.S. home values are slightly higher than they were a year ago. And again, we're talking about modest growth, not dramatic or overheated, but not negative territory either. Then we have Redfin's 2026 housing forecast. Redfin is projecting roughly 1% price growth nationally this year. It's steady and measured, and it lines up with what we're seeing in other reports. That's a very different environment than 2021, and it's also very different from the collapse we saw in 2008. So when you step back and you look at the broader picture, the pattern is consistent. Growth has cooled, things are more balanced, but prices aren't falling nationally. Now that takes us to item number two, why it feels like prices should be falling, right? Homes are still expensive, monthly payments are high because of mortgage rates, first-time buyers are stretched. So emotionally, it feels like prices should be correcting, but here's what's really happening instead. Higher mortgage rates cool demand, yes, but they also locked many homeowners into low-rate mortgages from a few years ago. But they also locked many homeowners into low-rate mortgages from a few years ago. That limited the number of people willing to sell because giving up a 3% rate for a 6 or 7% rate is a big jump. Most are saying, not going to do that. Never surged the way some had expected. In many markets, we're still dealing with relatively tight inventory, not extreme shortages like before, but not an oversupply either. And when supply stays tight, even softer demand isn't always enough to push prices down significantly. And the balance is what's holding prices steady. Buyers are more cautious, sellers are more realistic, but neither side is desperate, and markets don't crash when both sides are relatively stable. And that takes us to number three, what could happen in the rest of 2026? Looking ahead, most forecasts remain conservative but steady. Redfin expects about 1% growth nationally this year. Zillow anticipates modest appreciation as well. FHFA's data continues to show year-over-year gains. When several independent reports show the same trend, that adds credibility, but it doesn't mean every city is experiencing the exact same conditions. There are pockets, especially in some oversupplied metro areas, where prices have softened, and we may see a little more of that in specific markets. local conditions can vary depending upon inventory levels, job growth, and buyer demand in that area. But nationally, the data does not support the idea of broad housing downturns. What we are seeing is normalization. The market has shifted from rapid acceleration to a steadier pace, and that's actually healthier in the long term. What it means for buyers and sellers is number 4 in our categories, and what that means, if you're waiting for a dramatic drop in home prices, the data suggests that may not be the most likely outcome. However, buyers today may have an advantage that didn't exist a few years ago: less bidding competition, more inventory choices, more negotiation flexibility. Those factors can sometimes create more opportunity than a small price decline would. So in other words, you may not see lower prices, but you may see better terms. And in many cases, that can have just as much impact on your overall investment. So now let's just talk about what this means for sellers. For sellers, this is no longer a name your price market. Pricing strategy, presentation, and preparation matter. Buyers are comparing more carefully now. They have options. That means positioning is everything. But values are not collapsing. In most markets, well-positioned homes are still selling at stable levels. The sellers who win in this market are the ones who price realistically from the start and present their home in a way that stands out. So, are home prices finally coming down in 2026? Nationally, the data says no. And what we're seeing instead is stabilization. The rapid run-up we experienced a few years ago has leveled off, but broad price declines just aren't showing up in the national numbers. Now, what's happening across the country and what's happening in your neighborhood, like Louisville and Southern Indiana, can be two very different things. Real estate is local, and that's where the real story is. If you're wondering what this means for your home's value or your buying power, well, let's take a closer look at your specific market. You can reach out to schedule a one-on-one strategy call with me, and we'll build a plan that makes sense for you this year. If you found this breakdown helpful, make sure to like and subscribe so you don't miss future market updates and practical real estate insights. By the way, we talk about this and a whole lot more every Sunday morning on my radio show. It's from 8:30 a.m. to 9 a.m. on radio station 840 WHAS. It's 8:40 a.m. And if you don't have an AM radio, listen, don't worry about it. Go to your browser on your phone or your computer, type in 840 WHAS, and it's an iHeart radio station. You'll be able to listen live as we're on the air. Again, 8:30 to 9 a.m. Sunday mornings on 840 WHAS. Well, that's all the info I've got for you now. I'm Bob Sokoler, owner of the Sokoler team at simpler.realestate. Thanks for watching.